Yeah, Tuesday. What's up, everybody? Tuesday morning edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a great trading day yesterday as we are looking at a 2% dip in the overnight markets. The S&P, after its big rally yesterday, is down about 2% in overnight trading. So we're going to take a look at that as we are wondering, what is going to come of all of this volatility? Where's our next big move? So we'll go ahead and take a look at that today. If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell. Quick alert on April the 1st. Remember, on April the 1st will be our our day that we switch over the daily market commentary from my personal YouTube page to the Traders Army YouTube page. So go to youtube.com/Traders Army. Make sure that you are a subscriber of our page there, as we will be migrating all of our content over to that YouTube page. So please make sure that you do subscribe. All right, let's go ahead and dive in. S&P, we're down 55 points this morning as we're selling off of this level. Now, yesterday we talked about the fact that we're looking at this area, this little bit of a demand zone, because we had a nice rally in the overnights, and we said, well, there's a little opportunity here on a 15-minute zone. But for those for the trained eye, what do we notice occurred before this 15-minute zone? We had basing in front of the level. One of the things that we do every day at Traders Army is we have a trade update page, and we update the trades. And it was literally 6:51 a.m. that we posted it. ES level has some basing in front of the level. So the basing in front of the level is the kiss of death, if you're familiar with that phrase. I talk a lot about that because we definitely had the basing in front of the zone, which negates the quality of that level. When we were looking at the DMC, I was kind of actually hoping we would get a little bit of a bigger move up, and then this would come into play. It didn't. However, that level was still a flip zone, and so a lot of members were able to take advantage of the fact that our flip level was created, and they got short in this area right here, since it became a flip level. Oftentimes, areas that make sense for demand actually work better as supply once they get traded through, especially in the instance where there's basing in front of the level. And that's exactly what happened in this zone. So now, looking at this area, we are coming down from that level. This is actually a terrible time of day, but because it's a flip level, I think it's still valid. Terrible time of day meaning it's about the worst time of day to identify a zone, frankly, 5:30 p.m. But I'm leaving it on there because it's really a flip level area that's not been retested for supply since trading through it yesterday in the late afternoon hours. So I'm going to leave that one on in that spot. We're trading down from this high up in here. It's about a 50-something point drop. Let's keep an eye on, some of these areas down in here. If we get some basing in the overnight, now this is our 2 a.m. area, so we started to trade up at the European market open, I guess 3 a.m. this time of the year. So our European market open was inside of this area. We could get a bit of a basing level here that could set up for a breakdown. So keep an eye on that. Once again, I must have the basing in front of the zone to make that worthwhile. Looking at the bigger picture overall on my 4-hour trend, my 4-hour is not really giving me a clean uptrend. It's really, this is the setup that I tend to look for pretty regularly is a move up, and then this is just I want to say that's probably a 38% retracement of that level, right? And being a 38% retracement of that level, let me go ahead and add let's make these let's do a 38% retracement. Let's make it, we'll make it pink so that it sticks out. I guess pink doesn't stick out very well. We'll make it bright red so it sticks out. There we go. So notice, we moved down, we rallied up to the 38% retracement. The next step is another leg down, right? So logically, our next move would be for price to continue to move down from this zone, as we would anticipate price falling from this region. So bearish positions are going to be ultimately what we're looking for today with that in mind. Same thing in the NASDAQ, very similar picture. Inside of the NASDAQ, we've got on our 15-minute chart. Now we're going to probably be looking at breakdowns are probably going to make a bit more sense. It's provided that we get the basing in front of the level, but we have a very similar picture in the NASDAQ that we do to the other markets. All right, moving over to crude oil. Now, crude, we had a little bit of a breakout candidate here, and we popped up above there in the overnight by literally one candle, right? And then if you look 1, 2, 3, 4, 5, after 6 candles, we had gone essentially nowhere, right? Nothing had happened, and now we're starting to see, we've had a number of candles in a row of overnight weakness. So continuing to look at this on kind of the bigger picture, obviously we're coming down very hard. We had a strong rally yesterday up to our potential reversal point. This is where I talked about a candle-to-candle level there at about 37, little over 37. We didn't quite make it up to that level yet. Our overnight session, we've sold off fairly hard from the, I guess would be the Australian market open, and have not really seen any green candles to give us any semblance that's going to continue to move up. Now, I will say this, I'm still going to keep this line here because I think that this is still a valid area. So our breakout gave us kind of that 6 candle, as it didn't give us any strong entry points. You might have a reversal point up here if we do get a little bit of a bounce. So keep an eye on, sliding this to the 15-minute. If we get a bit of a bounce, you might have a decent little opportunity to join the short somewhere up here if price comes back up into that region and into that area. Next would be gold. So in our gold levels, we had our little area of demand here, which we had switched to a confirmation entry because we came so close to it here, got a little bounce off of that gold confirmation level. And now I think we could see, provided we get the basing, keep an eye on this area up here for a potential breakout. Now, why this area? Well, because this is an area of resistance that we're kind of popping in front of. Little bit concerned with this supply here from yesterday's market close, but keep an eye on that one for a potential reversal. If I look at this on the 4-hour, right, my 4-hour trend, this is a bit of a pullback, but let's keep an eye on this area here for a potential breakout. Looking then at our bonds and currency markets, so starting with the ZN, which is our 10-year note, we're seeing a little bit of double topping on this spot here. It's not a clear double top, but it is a little bit of selling pressure. What's the next move would be that price would continue to come down. Now, the Treasury notes are a little bit in flux based on what are the stimulus packages that we're going to do regarding coronavirus. There's been talk of a lot more stimulus packages, which I think would greatly influence the bonds. So we do have a demand level here, so keep an eye on this one. If we base in front of it, remember, we're not going to be able to use that, right? So bonds basing in front of this level will make that an unusable zone. In the Australian dollar, so here was a really good trade from yesterday, which was our breakout. So we broke out of that Aussie dollar, got a really nice move away. So if you were able to catch that one, great. That was also in our trade update, the one I pointed out earlier. AD trades both stay also basing for possible breakouts and setups, and that's exactly what happened. We got a nice bit of basing in front of the level and a very strong move away. Now we've rallied back up to the origin of that breakout, and now I think we're reversing and coming back down as we've hit this candle-to-candle level. So I'd be all right if you wanted to go candle-to-candle from this point and trade this down from here. If you're not comfortable quite yet getting in, you can look and see if you get a breakout to the downside as we base below here. Inside of the euro. So in our euro level, we identified this little 15-minute supply zone yesterday. And we were looking at either the breakdown or the reversal. In both cases, we were looking at the short in the euro. Price came into our 15-minute level. We got a nice little move away. Now, if you did the 6-candle rule out of this position, 1, 2, 3, 4, 5, 6, you did wind up getting a nice little move. It actually came back in and gave you another opportunity and then moved away stronger throughout the day. And we got a little bit of the breakdown that we talked about as well. So that short worked out very well inside of the euro. So I'm going to remove that level at this point, and I'm going to take a look at this level, which was just formed in the overnights. Remember, we're still on a 15-minute chart. So switching this to a 15-minute chart, or put it right in here, and that would be where we anticipate the reversal. Now, with all these upper wicks here, that tells me there's a lot of selling pressure. If we get, very similar to what we did yesterday, if we get basing in front of here, it can work for a breakdown, and if not, then we have this area up here for the reversal. Next would be our Canadian dollar level. So looking at our Canadian dollar level, we can see that we had talked about this area here for a breakdown, provided I get the basing. I did not get clear basing. Yes, we came down from there, but the basing was not a clear basing right in front of the zone. So I need to remove that level at this point. I can't use that zone. I do see, though, that our overnight move up is losing its steam and momentum. So look for an opportunity down below here in this region. Great British Pound and Japanese Yen. Now this one, unfortunately, I totally missed on in the pound, and that's going to happen, right? Everybody knows that those kind of things are definitely going to occur as we started this basing here, and then we dropped down through this level. So this basing may or may not have been a little too close for you. If you think about it, if you got long in this pound level, this is your exposure, right? So this distance would be your risk in that pound level. So if I go with a 2-to-1 reward to risk, a 1-to-1 reward to risk puts me right at about my opposing level. A 2-to-1 reward to risk puts me above my opposing level. So it may or may not have made sense based on your own trade rules, right? Because of this basing that was going on right up in here. Now, we did indeed get a move down from that level as that level didn't hold, came to our other level, which was also a little bit of basing in front, and we got a bounce in it on the overnights. Strong move here because the central bank in England said that they're gonna curtail, they're gonna do a stimulus to curtail some of this movement. So I'm gonna now take a look at this area up here for a potential reversal zone if price comes back into this region. And then the Japanese yen, we also had another little level that I thought might hold from yesterday as we came. We had dropped just a little bit out of it, and I thought that would give us a good chance to get back in for a very small level. So the yen and the pound, both of them gave us either a bit of a stop out. The pound you may not have gotten into, but a little bit of a move on that, but more than made up for by the euro and the Aussie in those positions that we have in there. So, I know you guys are probably tired of hearing me say this, but don't overreact. Don't feel like you got to chase. We are still finding trades in this market. The trades that we're finding, though, we just have to be a bit more selective on when we take them. But our rules all still hold. Everything still works the same as far as our rules, looking for quality levels in these markets and following our 6-candle rule as well as our confirmation entry. So if you guys have any questions, as always, send us an email, support@tradersarmy.com. I will talk to you soon. See ya.